All right, my name is Darren Joseph from HCJ.tax, the team that seeks to demystify the sometimes confusing world of cross-border taxation. And today we have the honor and the privilege of having a conversation with Roger. Roger, can you please introduce yourself?
Hey, Darren, how are you? And hello, everyone. My name is Roger Chi. I'm the CEO of the Singapore office for 1291 Group. We are based in Zurich with 13 offices around the world. Zurich, Geneva, Liechtenstein, London, Panama, Bogota, Sao Paulo, Mexico City, Dubai, Hong Kong, and most importantly, here in Singapore.
Are there any final words that you want to share? Any final comments?
Yeah, so I think these structures tend to be very good, right? Whether you're, let's say, if you're a U.S. person living in the U.S., we have structures for that, right? And you can defer your taxes. So as I mentioned, for the U.S., for Western Europe, for UK, for Australian clients, it's all about tax optimization. And the key way that happens is through tax deferral. Basically, if I buy an asset for $50 and sell for $100, usually maybe $50 of gains. Under life insurance, the life insurance company doesn't have to pay those taxes. Whereas you and I have to pay maybe $25 of taxes. $75 comes back to me. In life insurance, the full $100 comes back. There's no tax drag as long as it stays within the structure. So I can move between assets. I can go between securities to bonds to crypto to real estate to operating companies to private equity investments and all the way back, all within the structure without having that tax drag. So it's very, very powerful in that way. The other thing is that, if you have families who have, let's say, kids or beneficiaries in different jurisdictions, or you're planning to move to different jurisdictions, these things are a very, very good structure. So, for example, we have a lot of clients who are going to be moving to the US or to Spain or to Portugal or to Australia. And you can do a lot of structuring before you move to make it tax efficient before you go there so that it doesn't get caught in the tax traps. So a lot of clients, for example, I'm seeing in Singapore, it's a very low tax jurisdiction, right? So I think the personal income tax, I think, is between 17 and 19% versus, let's say, Australia, which is over 50, right? Or if in California, again, over 50. You can structure it before you migrate or immigrate to Australia or US, UK, and then it doesn't get caught up in the tax nets there. So it's a very, very powerful type of thing. And oftentimes, even in some certain jurisdictions, let's say Spain. So Spain has the non-habitual rule, the 10-year non-habitual rule, right? Which basically says that, I think all your income taxes, you don't pay income tax for 10 years. But the one asterisk in there is that you do have to pay capital gains tax. And a lot of wealthy people actually make money on capital gains, not on income, because wealthy people tend to make more money on assets they own. They don't have to work, right? So, so any capital gains will get caught up in it. But if you structure it properly before you migrate to Spain, then you may not have to pay those taxes. You may be able to defer those taxes forever, right? Which is very, very powerful, right? As long as you structure it correctly and you get a Spanish compliant policy and follow the rules for each of the different countries. So I think, the key thing is that these things are very, very flexible. It's important to have a very good advisor who's used to cross-jurisdictional issues, right? A US policy and a UK policy and a Spanish policy and a French policy and a Belgian policy and a Chinese policy may be all very different. Find somebody who has that broad sort of expertise to be able to navigate across jurisdictions, if that's your case in your family, and most families now are like that. And seek sort of professional advisors like Darren or myself. And that's probably the best last words.
Okay, fantastic. So asset protection, succession planning, estate planning, pre-migration planning. Yeah, it could be a silver bullet for the right family.
Right. We like to think so. And the easy way to sort of remember the different benefits is protect like the watch. I don't have one. It's P for privacy, A for asset protection, T for tax optimization, E for estate planning, and C for a cash component. If you have one of these needs in your family, reach out to Darren or myself, and we'd be happy to sort of walk you along and walk you through the process.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.